Hey out there, YouTube family. Welcome to my new show, Making Financial Sense and Using It for Prosperity and Financial Security. So this is a new format. We're going to be talking about financial related matters, spending a lot of time talking about stocks. I'm also going to be sharing my trades, and I'm actually putting my hard-earned money behind, and I'm going to be releasing my trades on X. So if that's something you want to follow, only paper trading, because I'm not licensed to give you any type of financial advice. But if you want to follow or shadow what I'm doing, you're gonna have to follow me on X. My X account link is noted at the bottom of the show notes, and that's the only place where I'm going to be releasing my active trades throughout the week, unless you wait until the video comes that I release weekly, and you'll find out what I'm doing at least the beginning of the next week. But in terms of actively following me, you're gonna have to follow me on X. So without further ado, let's jump in here and talk about medical debt crisis, because $74 billion per year is spent on medical debt, and almost 67% of all bankruptcies in the United States are filed because people feel they're overwhelmed with medical debt. They just can't get their head above water. So let's go ahead and listen to this video where they're talking about the crisis and how bad things get. And some people are advocates of, do we need universal health care? I'm not sure if that's the answer or not, but let's go ahead and dive into this article.
At 4 o'clock, you get sick, you get treatment, and for millions in the U.S., you then go into debt. Channel 2 consumer investigator Justin Gray is here with a new report showing just how big of a problem this has become.
Wendy, the new report finds the amount Americans borrow to cover health care expenses is staggering. We're talking in the billions.
It's awful. You should not have to be in debt to be healthy in this country, period. And end of story.
But for some 30 million Americans, it's not the end of the story. A new report finds Americans borrowed $74 billion last year to pay for health care.
I think we pay enough for health care insurance. We shouldn't have to pay out of our pocket also.
But Liz McCabe does just that.
I have had to borrow money in the past to pay for my medical expenses. It's an expense that, we have to plan on every week out of our paychecks. Yeah, it's out of control.
The report by West Health and Gallup finds most Americans borrowing money for health care are under age 50. But the median amount borrowed rises significantly with age, from $300 for young adults to $3,000 for those 50 plus.
Very few people know what they're going to be charged.
Dr. Sebastian Telletrio teaches public policy at the University of Virginia. He says the report doesn't include indirect medical debt.
There's a lot of people who they get a hospital bill and they're going to actually pay their hospital bill, but that means they're also not going to pay other stuff, right? Maybe I'm going to get behind my car loan. Maybe I'm going to get behind my mortgage payment or my rent.
Justin Gray, Channel 2 Action News. And I'm still right here. The report finds concern about getting into medical debt lessens as income rises, but it doesn't disappear, even in households earning more than $180,000 a year.
This is just ridiculous when you think about just how out of control it can get for so many people, when you think about just how in debt we are as a country. But thank you for the insight, Justin.
So just a crisis, we all are aware of that. And I've talked about this in previous videos, saying health insurance is not a replacement for health care. Health insurance is not a replacement for health care. Health care is something you have to embrace and be proactive. You have to make sure that you're eating a balanced, healthy diet per day, routine exercise, things of that nature, because once you get into the system, specifically within the United States, the system is broken. If you need to see a specialist, sometimes there's a delay before that referral hits that specialist desk, and you could be waiting 2, 3, 4, almost 6 months before you see a specialist. Sorry if you're hearing some noise in the background. So really, really touchy situation. Universal health care, in some countries it works, in some countries it does not. I think Sweden has a basically successful model of universal health care. Our partners to the north, Canada, have a horrible universal health care system. So many people from Canada travel around the world, medical tourism. I know Thailand is a place that's visited for medical tourism. Malaysia is also on that list. in the Latin America country. Panama, which is on my short list, has very, very affordable, high quality healthcare at a reasonable price. One lady was talking about, just in case she got cancer, because cancer runs in her family, that how much could she get like a separate policy that would take care of that in the event that she got cancer. And to her surprise, she found out that that policy would only cost her roughly about $5 a month, or about $65 per year. So there's a lot of options out there. There's a lot of people that do medical tourism. There's a lot of people relocating out of the United States as they get older because they're worried about the ability to afford healthcare. So it's a real crisis. So be preventive with your health. Don't get into the system, because ultimately all of us are going to get sick and our health is going to break down. You just want to delay the inevitable for as much as possible. So that's going to do it for this portion of the show. The second half of the show, like I said, with this new format, we're going to be talking about stocks, but specifically the stocks that I'm putting my money in. And I'm going to be releasing my trade alerts, not just on what I think is going to happen, but stocks that I'm actually putting my hard-earned money into, and I'm going to be tracking my results. But the only way to follow that is you're going to have to follow me, like I said, on X. And if you want to follow me on X, my X account link is going to be in the show notes, and that's the only place that I'm going to be releasing trade information and stock information. I'm no longer going to be doing that on Facebook because I'm trying to target an audience. Finally, last but not least, before we get into the stock recommendations, I think it's important that if you're middle class, if you're lower middle class, if you're struggling, this is a skill set that you need to learn, because in the past, most Americans accumulated their wealth through real estate. Home ownership is something that is of the past. The average age of the person who's buying a home for the first time in the United States is almost 57 years old. They're like 5 or 6 years removed from being eligible from Social Security. I do not see that dynamic changing to the point where housing becomes affordable unless we have a massive reset. And that just hasn't happened. So without further ado, let's go ahead and slide over here and look at some of the stocks that I am looking at, or I should say more importantly, that I'm already in. So the first one is gold. And for those of you who have been following me know that I have shorted gold for about the last 3 days. You see GOD here, and it's rolling down. See, this thing is getting ready to curl down right there. So the stock that I chose to short GOD, because GOD is just a derivative of gold, is the stock symbol was GLL. And this is a ProShare Ultra Short Gold Fund. So basically the way this stock operates is that it goes up in value when gold goes down. Get this thing out of here. There we go. So as you can see here, here's the RSI. I think it's slowly going to move up, and the MACD is on its way getting confirmation. So I'm jumping a little bit ahead of the game. So what I did is I took a calculated risk and I took an out of the money call option. And I think I took it for maybe at 16 or 15 or 16. I don't remember the exact amount, because on Friday, this thing closed at 13.54. And as you can see here, it opened up at 13.45 and it closed at 13.54. So there's some room to the upside on this. And I have this option contract open for like another 27 days, so well over 3 weeks. So I'm in a very good position to profit off this particular stock. The next stock that I put my money into is called Polaris. That stock symbol is PII. And as you can see here, once again, the RSI, it looks like it's going to get confirmation above that midline. I'm just being a little bit proactive. This is a little bit more of an advance, but it's more risky because things don't move the way I'm predicting. Then I could lose quite a bit of money. The MACD here looks like it's trying to touch that line, that divergence line, and maybe curl back up. Once again, I have out of the money calls on Polaris, I think at 44 or 45. So I'm very optimistic that this is going to be a profitable trade. And last but not least, I'm in, it's called the Trade Desk. This stock has really been beaten down. One person could surmise as to whether or not this is a bull flag. You see the pole down here and this consolidation down here. So a lot of people think that's going to be a bull flag. I think it's going to be invalidated. I think there's more room to the upside. I think the stock, even though it closed at 56.31 on Friday, definitely has the potential to reach high 60s, if not 70. As you can see here, this RSI has been massively oversold and it looks like it might be trying to curl down, but I'm optimistic that this thing's going to turn around. I think I've got about 2.5 weeks on this out of the money as well. And as you can see here, the MACD has already given us confirmation. So what we have is called a divergence. A divergence is when the MACD is positive, but the stock movement hasn't reflected the same positive trend as the MACD. The MACD is positive, well above confirmation, but the stock movement or the stock price has not caught up to it yet. That's called to me, a bullish divergence. So I jumped ahead of the game and says, this thing is going to turn up. So while the option premium wasn't that expensive, I took advantage of an out of the money call and decided to float that out, I think, for about 3 weeks. So like I said, that's going to do it for this edition of the, I almost said the Kevin Strong Show, Making Financial Sense. Once again, if you want to follow these trades, follow me on X. I'm going to be starting some more information, some training on how to trade options or how to trade stocks. Maybe show you some paper trading accounts that I use on TD Ameritrade, Thinkorswim platform. Some people like it, some people hate it. I think it's a fabulous platform for those who want to paper trade, which is a fake money account, to come up with a strategy, test your methods without putting real money at risk. So I hope you enjoyed this new version and this new channel. I hope it gets a lot of traction. I'm excited about it. And as always, ladies and gents, keep your credit score up and your debt down. This was Making Financial Sense with Kevin Strong.